What if you could actually predict Dogecoin's next big move before it happens? Before the charts spike, before the headlines explode, before social media even catches on, knowing what Dogecoin might do next could change how you invest forever.
Dogecoin isn't just another meme coin anymore.
It's a symbol of unpredictability in a world that runs on hype, sentiment, and data. But behind every move, behind every pump or crash, there are patterns visible to those who know what to look for.
Today, we're breaking down how to read those signals, decode Dogecoin's behavior, and predict what might come next. Because while everyone else reacts, smart investors prepare.
And the truth is, Dogecoin's price never moves randomly. It reacts to a complex web of influences, from whale activity and exchange liquidity, to social media sentiment and global financial news. So if you can learn to read those signs early, you're no longer guessing, you're anticipating.
The goal here isn't about hype. It's about control, understanding how markets think, how traders react, and how Dogecoin often behaves differently from traditional cryptocurrencies.
By the end of this video, you'll not only understand why Dogecoin moves the way it does, but also how to recognize those turning points before the rest of the market catches up.
So let's start by peeling back the layers, because predicting Dogecoin's next move isn't about luck, it's about timing, psychology, and data. Every move in Dogecoin's chart begins with human behavior, and that's where most traders go wrong.
They focus only on price candles and technical patterns but forget that each price swing is driven by a decision, a buy, a sell, a moment of fear, or excitement.
The first key to predicting Dogecoin's next move is understanding sentiment.
Dogecoin is fueled by community energy, the jokes, the memes, the tweets, the sense of belonging that keeps it alive.
But that same emotional energy makes it volatile. Tools like Sentiment, Lunar Crush, and X, Twitter, Analytics help track mentions, hashtags, and keyword spikes. When engagement on Dogecoin suddenly rises by 30% or more within a short window, especially without major news, it often precedes a price movement within hours. Second, whale tracking. The top Dogecoin wallets, holding millions of Doge, often move coins just before big market shifts. Platforms like Whale Alert and Into the Block show wallet transactions in real time.
A sudden increase in transfers from major wallets to exchanges usually signals upcoming sell pressure. Conversely, large withdrawals from exchanges into cold storage often mean whales are accumulating, preparing for a longer hold, which historically leads to upward trends. Third, correlation with Bitcoin. Whether we like it or not, Dogecoin's heartbeat follows Bitcoin's rhythm.
But it doesn't mirror it, it amplifies it. A 2% move in Bitcoin often results in a 4% to 6% swing in Dogecoin.
Tracking Bitcoin's volatility index, BVIN, can provide early signals of incoming Doge action. When Bitcoin starts consolidating after a strong rally, that's when speculative coins like Dogecoin begin to surge. Traders rotate profits from major assets into high-risk, high-reward plays.
Next, Elon Musk and media cycles. No discussion about Dogecoin prediction is complete without Elon's influence.
When Musk makes a comment, even indirectly related to crypto or X payments, Dogecoin spikes, sometimes immediately, sometimes after a delay. Historical analysis of over 30 Dogecoin rallies shows that Musk-related mentions or tweets often lead to short-term bullish waves lasting 2 to 4 days. Recognizing when sentiment is artificially inflated helps you avoid buying tops and focus on post-hype entries.
Then there's technical analysis.
Patterns, moving averages, and volume profiles tell their own story. Dogecoin tends to respect the 200-day moving average as a key long-term trend line. When price crosses above it with strong volume, it usually begins a multi-week rally. The RSI, Relative Strength Index, below 30 often marks oversold zones that lead to short-term rebounds. Meanwhile, Fibonacci retracements between 0.382 and 0.618 levels frequently serve as accumulation zones before the next breakout. Now, combine these insights with macro triggers. When global markets experience liquidity shifts, such as rate cuts from the Federal Reserve, or inflation data surprises, crypto often responds violently.
Dogecoin, being one of the most retail-driven coins, magnifies that reaction.
Every time investor confidence in fiat weakens, speculative appetite returns, and Doge benefits as a familiar, low-entry option for new traders.
But there's another layer few people discuss: exchange behavior. Exchanges often adjust their liquidity pools and market depth to anticipate user behavior. During accumulation phases, order books show large buy walls at key psychological levels like 5 cents, 10 cents, and 15 cents. When those walls are removed or thinned out, it's often a precursor to volatility, a sign that price might soon test new zones. All these indicators, sentiment, whale activity, Bitcoin correlation, technical levels, and macro conditions, form a network of signals. But the real edge comes from seeing confluence, multiple signals aligning at once. For instance, when Dogecoin's social activity spikes, whales start accumulating, and RSI drops into oversold territory, that's a signal stack. Historically, those alignments have preceded some of Doge's strongest rallies. Predicting Dogecoin's next move doesn't mean guessing exact prices. It means understanding probabilities and positioning yourself on the right side of momentum. The traders who profit consistently don't chase green candles, they wait for alignment, and then act decisively. Another crucial element is timeframe awareness. Short-term predictions rely heavily on volume and emotional sentiment, while long-term trends depend on adoption and ecosystem growth. Dogecoin's integration into payment platforms like X and growing merchant acceptance could shift its fundamentals. If utility expands, short-term fluctuations become noise within a much larger bullish arc. The market also reflects cycles of emotion: optimism, euphoria, denial, panic, and recovery. Recognizing which phase the crowd is in helps predict behavior. When social media is filled with despair and price has already dropped 50% or more, that's historically where reversals begin. Dogecoin's past cycles in 2018, 2020, and 2022 all followed this pattern. In contrast, when every influencer suddenly becomes bullish, new accounts flood in, and hashtags like hashtag DOGE to $1 trend daily, that's often the exhaustion phase before correction. Identifying this sentiment curve gives you clarity when others are clouded by emotion. But the most overlooked factor of all, volume divergence. When price drops but trading volume decreases simultaneously, it signals weakening sell pressure. It's not just about what price does, it's about how much conviction is behind it. Strong reversals almost always start with quiet volume followed by a sharp uptick the moment smart money steps back in. At the end of the day, predicting Dogecoin's next move is about combining logic, data, and psychology. It's a process of observation and discipline. You don't need to be a financial expert, you just need to recognize how these moving parts interact in real time. So, what does all this mean for Dogecoin's future? Dogecoin has matured far beyond a joke coin. Its community, its integration into payment ecosystems, and its link to cultural trends make it one of the most fascinating digital assets to watch. Predicting its moves is less about technical wizardry and more about understanding rhythm, the rhythm of people, money, and momentum. Every drop has a story. Every rally has a signal. If you can learn to read those stories without emotion, you'll begin to see the market as a living, breathing reflection of collective psychology. Dogecoin, at its core, thrives on that emotion, but beneath the memes lies a predictable cycle for those who look closely enough. So next time the price moves, don't just watch the chart. Watch the conversations, the wallets, the trends, and the tone of the crowd. All the clues are there. Dogecoin may not follow traditional logic, but it follows patterns. And those who master reading them are always one step ahead of the market. If you found this breakdown valuable, make sure to subscribe because we're decoding the crypto market one insight at a time. The next move might already be forming as you watch this. Stay sharp, stay informed, and stay ahead.